The fact that central banks intervene in the gold market is common knowledge. But how exactly do they do this, and what effect does it have on the gold price? And with gold averaging a return over 9% for the past 22 years, we ask the question, are they actually any good at suppressing the gold price? For answers to all this, we speak to Chris Powell of GATA, the Gold Antitrust Action Committee. And if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to Goldcore TV and hit the notification bell now. Chris Powell, welcome to Goldcore TV.
Great to be with you, David. Thank you.
Now, Chris, you are the director, one of the directors of GATA. And from your website, I got this phrase, which the purpose of GATA is to expose, oppose, and litigate against collusion to control the price and supply of gold and related financial instruments. Does that sum it up?
Yes, it does. And I think you can add that our primary targets have been the major central banks for their continuing surreptitious intervention in the gold market.
Now, there's a very well-known phrase from Alan Greenspan. It was uttered in 1998. And I don't know if there's any coincidence in that, but 1998 is the year that GATA was actually formed. Is that correct?
Yes, I guess late 98, and then we were incorporated formally in, I think, January 99. So, yeah, Greenspan's testimony to Congress, I think it was in June or July of 98.
Yeah, so the quote is, central banks stand ready to lease gold in increasing quantities should the price rise. Can you explain, just for our audience, how it is that central banks interact in the gold market, other than just buying and selling gold? Well, and what effect that actually has on the price?
They provide gold to investment banks, to bullion banks, for the trading purposes of the bullion banks. Now, central banks have sold gold outright over the years, and some have purchased gold outright over the years. The selling was usually conducted in order to suppress the price. It was done openly in the 1960s through the London Gold Pool, which was an association of the United States, United Kingdom, and I think 5 or 6 European central banks. And the objective there was to keep the gold price at the official Bretton Woods price of $35 an ounce. So central banks have used to intervene openly in the gold market by distorting their reserves. They distorted so much during the 1960s through the London Gold Pool that they were nearly exhausting their reserves because they were underpricing gold compared to what the world thought it was worth. I guess it was in March '68, after the United States' gold reserve had been run down from about 25,000 tons to 8,000 tons, or it stands today. The United States realized it was losing too much gold, and in a few more months at the current rate of distorting, the United States would be out of gold. And its ability to intervene in the currency markets would be much limited. So in the spring of in spring of '68, the U.S. government asked the Bank of England to close the gold pool, and they began intervening in the gold market through occasional sales. And then in 1974, they helped generate a futures market in gold and began intervening against the gold price through the futures market, and found that was a lot more efficient for them because they could escape having to distort a lot of their metal. They could fool the market by the sale of futures, or they didn't have to sell as much metal.
So they'd still be able to hold on to the physical. And then they'd be able to enter the market via the futures market by selling paper contracts on the futures exchanges.
Yes, they would economize on their gold reserves, but they would still need a little gold off and on to keep the market thinking that it was actually a physical market. These days, we think that the central banks are intervening primarily through their own futures market sales, through intermediaries, through the leasing and swapping of gold with bullion banks, which I think is undertaken to apply the central bank gold to certain hotspots in the gold market to prevent any one gold market from getting out of line with the other markets. For example, our Bank for International Settlements consultant, Robert Lamborn, who studies the BIS pretty closely, especially their monthly statements of account, reported a few weeks ago that the gold swaps and derivatives position of the Bank for International Settlements is at its highest peak in what appears to be the whole history of the BIS. So the intervention of central banks using the BIS as a broker right now, using swaps and futures and options, which the BIS admits trading in, this intervention appears to be at the highest point in history.
And the purpose of that, in your view, is to continue to suppress the gold price, isn't it?
Yes, it's to protect government currencies against a potentially independent world reserve currency. Before we got started here, I looked up an interesting comment that was made in December by Olaf Scholz, who's the German finance minister. He was emerging from a central bank meeting about cryptocurrencies, about which they were very concerned, and he said that we must do everything possible to make sure the currency monopoly stays with states. He was saying that governments are going to control the money. They do not want any independent form of money available to the markets or to individuals. This is a very candid statement by the German finance minister. It was directed against cryptocurrencies, but I think it equally well could have been directed against gold. I guess 2-3 weeks ago, I wrote to the Bank of England, which has answered me before, to ask if the Bank of England and the UK Treasury had leased gold in the past 12 months, and if they had called back any gold leases within that 12 months. Yesterday, I got a very cordial but terse answer from the Bank of England saying that, sorry, no information is available about that. Basically, they were saying, we can't discuss this. This is a far too sensitive subject. And they're absolutely right. I mean, they can throw me off by telling little GATA that, oh, we're not going to talk about gold leasing with you. We're not even going to tell you if we're still in the gold leasing business. But if the Financial Times asked that question and put the refusal to answer on the front page, the world might change a little bit.
Now, just to kind of do some research for this video, and I'm looking back over the movement in the price of gold, particularly since I took 1998 as a point in time. And in 1998, we were at $295 an ounce in gold. And last year we hit over $2,000 an ounce, up to $2,060, $2,080 an ounce. That's a compound rate of about 9.25% per year over those years. So if there's suppression in the gold price, is it a case that the central banks aren't very good at suppressing the gold price, or is it a case that they are managing it higher at a slow rate? They're trying to manage the bull market, the rise in gold, or why is that we're still seeing a good 9.25% on average rise in gold if we're seeing this suppression?
Well, Jim Rickards, the financial analyst and author, often says that. Often notes that central bankers say they want orderly markets, and I think that is the euphemism for markets they intervene in to make sure that markets don't behave like markets. Markets are occasionally disorderly. Mm-hmm. Things happen, and supplies and demands change. They can change abruptly. Yes, gold is on average had a pretty steady increase over the last 20 years. On the other hand, the disparagement of gold throughout this time has been that in spite of its rather steady increase in price, it has not kept up with inflation. It has not kept up with the valuation of certain other assets. Look, I keep reading that in the past year, the world money supply has quadrupled. Has the gold price quadrupled? Of course not. There's intervention going on here, and maybe there's good reasons for it, but obviously it can work only when it's deceiving markets. So the central banks refuse to let you know what they're doing. They refuse to answer your questions, as the Bank of England refused yesterday. And if the world fiat money supply can quadruple in 1 year, well, I imagine that they would probably prefer that the gold price did not quadruple in the same period to match the fiat money volume increase, because then people might begin to think, hey, maybe our money's not so good. As the German central finance minister said back in December, they want to make sure that the currency monopoly remains in the hands of states, not in the hands of markets, not in the hands of individuals. And they can do this only by surreptitious intervention in the markets. They can do it only by deceiving the markets, deceiving the investors, really betraying democracy. You don't have democracy unless you know what the government's doing. And that's really our big issue here. I mean, I couldn't give a damn personally what anybody wants to use as money, but I do want the government to be transparent and accountable, and society to be democratic. And that's really the struggle that we've been waging for 20 years.
And it's interesting as well that when you say that, like we've got in the stock market, we've got the plunge protection team, we've got quantitative easing, which could also be seen as manipulating the bond markets. We've got the Fed's open market operations, which again manipulates on the short end of the curve. And we've also got manipulation then in the gold market, as you're explaining here. I mean, is it a case of that's the world that we are living in now, where everything is being manipulated? Financial markets are continuing to be manipulated?
I think back around 2011, so it's probably 10 years ago, GATA had a conference in Washington, and I remarked that there are no markets anymore. There's just interventions, and I think this is where we are now. But we were at that point 10 years ago, David. The interventions in the key markets, which are the interest rate markets, were constant then. This is really what we have to address. I mean, do we want a free market economy, or do we want a totalitarian economy? Now, people in GATA and those who support us are inclined to believe that free and transparent and honest markets are great engines of human progress. That's what we believe. We think that manipulated markets, which really are not markets at all, that government-controlled economies are engines of backwardness. I think you can look at the Soviet Union for that. It stumbled along for 70 years, and then finally collapsed because the economy was phony. Well, we have a phony economy now here in the West. Markets are not determining prices. Unelected government officers are determining prices. I mean, I find it terribly ironic. The elected agencies of government, the legislatures, the Congresses, they can determine speed limits and drinking ages, but the valuation of all capital labor, capital labor, and currency in the world, the valuation of all assets, these things are being set secretly by unelected officials. That's not a democratic society.
And I suppose it extends as well, not just to the manipulation of markets, but also information. You mentioned there, you said the gold hasn't kept up with the rate of inflation. And we're mentioning that, it's gone up by 9.25% per year since 98. And the official inflation rate is close to, on average, 2 or 3%. But we know, and if we look at things like shadow stats, that the real inflation rate is significantly higher. So we're living in a world not just with manipulation in the markets, but also manipulation in information. Would you agree with that?
Oh, absolutely. It's, the systems we have now, David, I think are almost comprehensively corrupt. To fight against this system is like pounding your head against the wall when the financial news organizations themselves will not do their duty as journalists. For some years now, I have thought that the greatest power of central banks is not their power to create and to deploy in secret infinite money. That's a great power. That's almost total power over the world, but it's not the greatest power. Really, the greatest power they have is their control over the financial press, because the financial press will not report these interventions. I get a lot of complaints about this from GATA's chairman, Bill Murphy. He's very upset, as I am, that the financial press really will not ever put a critical question to a central bank about what it's doing in secret, and certainly never put a critical question to a central bank about gold. And he's very sore about this. But I point out to him that you take the Wall Street Journal or Financial Times. You go to page 3, and here's an ad for J.P. Morgan Chase, a primary dealer in U.S. Treasury securities, intimate agent of the Federal Reserve, a bullion bank that executes government trades in secret. You turn to page 5, there's an ad for Goldman Sachs. You turn to page 7, there's an ad for Morgan Stanley, and Bill wants to know why GATA's not on the cover of the B section. Well, I mean, if any newspaper ever decided to commit journalism in regard to the financial markets, and particularly in regard to gold, there would probably be a very big price for them to pay.
Can they continue to do this? Will they continue to do this, or what changes?
Listen, yesterday I sent to my press list, my financial market letter writer list, the dispatch about the Bank of England's refusal to answer a simple yes or no question. That is, are you guys still leasing gold? Have you called back any of your leases in the last year? I've sent that to many major financial news organizations and analysts, market analysts throughout the world. To my knowledge, not one has touched that question. Now, they don't have to believe that the documents I presented are genuine, but I provided them with the email address for the communications office of the Bank of England. They could email them and put the same questions to them. Well, they don't. I have been providing the documentation of central bank intervention against gold to major financial news organizations for many years. Every time we get an important document or disclosure, I send it to them. And with very few exceptions, they ignore it. I mean, this subject, David, is radioactive. This subject really affects the control of all capital, labor, goods, and services in the world, their valuation. It's a cosmic wrong, and we just have not found the integrity in financial journalism to confront it.
You've referred, Chris, to a few times to cryptocurrencies and various different comments with respect to cryptocurrencies. Bitcoin at the moment, and over the last year or so, has had an enormous rally. And is Bitcoin highlighting what you guys have alluded to over the years in terms of the continued creation and printing of money not being reflected in the gold price, and now people are turning to Bitcoin, feeling that it is a store of value and for the future, in the same way that gold has been for years?
Well, it certainly raises the question, how Bitcoin can rise so fast as a purported store of value when gold, at least in the last year or so has been so disappointing. I tend to think that I know the answer. I think I have the explanation. I think the BIS knows what the answer is. I think the International Monetary Fund knows. I think the major governments know what the answer for gold's poor performance is. Problem is, you can find some financial writers noting with perplexity the poor performance of gold in the last year, but you can't get them to ask any questions about it to the people who know. I mean, all you got to do is call up a central bank, their press office, and put a few critical questions to them. Nobody dares to do it.
So what's the next step, Chris?
Look, David, this issue truly is radioactive. It's the issue that will determine the valuation of everything economic in the world. The people who have that power, unelected people for the most part, are not going to give it up very easily. If the gold price is ever freed, the whole political economy of planet Earth changes. Power is instantly redistributed from these unelected people to markets and even individuals. That would be a sea change that those in charge of the world do not want to permit. I don't know how it would end up, but I think it would be more democratic than what we have now.
And Chris, finally, how can our listeners and our audience find out more about what it is that GATA do?
Oh, well, we're on the internet at gata.org. We put out usually a daily newsletter, sometimes comes out several times a day. People can subscribe to that without any charge. They can go to the top right corner of our internet site and enroll for that, and they can unsubscribe from it anytime they want. We maintain, probably our most important work is maintaining an archive of the documentation of central bank intervention in the gold market, most of it surreptitious. That archive is labeled documentation. It's in the left-hand side of our internet site page. We have a section next to it called the Basics, which contains a very long, detailed summary of gold price suppression policy through the years. I think that's a good introduction to the issue. We are a nonprofit educational and civil rights organization recognized as federally tax exempt by the Internal Revenue Service here in the United States. We're what's called a 501c3 organization under the U.S. Internal Revenue Code, a tax-exempt charitable type organization. People who would like to contribute to us can do so at our internet site. We rely on donations from supporters, and we don't get too much from mining companies. Mining companies are too scared of the government and their bankers, and I understand that. So we do rely on individuals who are willing to fight the power, as Jim Rickard said on CNBC 10 years ago. When you own gold, you're fighting every central bank in the world. And I'm afraid that's true. So that's true. If you want to pound your head against the wall for another 20 years, please sign up with us.
Chris Powell from the Gold Antitrust Action Committee, GATA.org. Thank you very much for joining us on Goldcore TV, and come back again and see you soon.
Will do. Thank you very much, David.
Thanks for watching. And I want to highly encourage you to check out this recent interview that I did with David Brady of Global Pro Traders, where he shares with us some incredible insights into the dangerous direction he believes that global financial markets are going and how you can protect your financial future. Go watch that video next. And if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to Goldcore TV and hit the notification bell now.